Objective 2. In this objective, we will see how we record accounting entries related to prepaid expenses, we mean prepaid charges, and prepaid revenues, accrued income. What are prepaid expenses? Prepaid expenses are actually expenses journalized during the accounting period and cover part of the next accounting period. We give example when a company pays insurance premium from on 1/10/2024, so over 1 year, so it will cover the period 1/10/2024 till 1/10/2025. So in this case, the insurance policy will cover 9 months from the next year or next accounting period, and this period actually, or this part of the policy, called the prepaid premium. So during inventory at the end of the accounting period, when we pay this insurance premium, we must journalize transaction to decrease the premium of the accounting period and transfer it to the next period related to the next year. So the entry in this case, we debit account 472 prepaid insurance and we credit 6268 insurance expenses. Let's see a practical real-life example. On 1/4/2024, Sam's company paid the rent of the company for entire 1 year, totaling $360,000. So here, first entry to record the payment of this expense, we usually we debit 6263 rent expense and we credit cash because we paid the amount of the rent for 1 year, but the date of payment was 1/4/2024, so we will have actually 3 months of the rent related to the next year 2025. So this rent is called rent or expense on advance or prepaid expense. So the entry to record this prepaid expense, we debit 472 prepaid charges and we credit the insurance expense account 6268 by $90,000, which covers the 360 total amount over 3 months, so times 3 over 12. By that, we moved this part of the expense into the next following year, which is year 2025. We actually recorded it in the account 472 prepaid charges. Another example, at the end of year 2024, when we are doing an inventory, we found some stamps like mailing stamps and legislative stamps and advertising posters. In this case, we must do a transaction to move these items to the next year because in the next year we will use them. So we debit 472 prepaid expense and we credit expense accounts according to each type of the expense related to the stamps. So we credit 6261 for transportation and communication, 6269 for other external services, and 644 for registration fees. Moving to prepaid revenues actually is related to the same concept or similar concept to prepaid expense, but here actually we have a revenue. Let's see this practical example. On December 1, 2024, Jud's company received an amount of $960,000 for patent rent belonging to Judd company, which covered December 1, 2024 till November 30, 2025. So we have an income actually in advance related to 11 months for year 2025. But actually, the prepaid revenue occurred in year 2024. So what we actually must record at the end of year 2024 as an adjustment entry is that we must actually debit 761 account other operating income and the credit 473 account income recorded on advance. Actually, when we record prepaid expenses and prepaid revenues, the usual case is that at the next of the following period, at the beginning of the year, when we are recording opening entries, we must reverse the prepaid expense and prepaid revenues previously recorded entries. So using the same previous examples. Now we are doing a reverse entry for the prepaid income or income in advance. So we debit 473 account income recorded on advance, and we credit 761 account other operating income. Also the same way for prepaid expenses, we do a reverse entry. So we debit the expenses account 62 accounts, and we credit 472 prepaid expenses.